All right, so will Bitcoin price crash? That's what we're going to be talking about right now. So the Bitcoin price, if you take a look at it at this very moment, it is 23,822. Let's see what CoinPaprika says. CoinPaprika says 23,807. Let's do a quick refresh on that. 23,807. Earlier today it was at 24,000. So with the price of Bitcoin going up at the rate that it's going up, 27% in the past 7 days, you have to ask yourself, are we going to see a pullback? Are we going to see a crash? What's going to cause it? And is it what's going to happen in the short term and the long term? So we're going to be talking about that in this video. We're going to be talking about some things that are taking place. We're going to be talking about some current news headlines. And I think the entire cryptocurrency landscape is changing fundamentally in a big way right now. First off, let me just give you this up front, then I'll go into more details. First things first, is Bitcoin price going to crash in the short term? Yes. My opinion, not investment advice, but my opinion is within the next 30 days or sooner, we're going to see a sizable pullback in Bitcoin, over 10%. Probably over 20%. We will see a hard pullback within the next 30 days. Could be 60 days. I think it's going to be within the side of the next 30 days. What does that mean long term? Absolutely nothing. The price of Bitcoin now, the fundamentals regarding price are far more positive now than they've been in the history of Bitcoin. I'll talk about that in a minute. Now, the fundamentals when it comes to the primary use case of cryptocurrency as a currency is horrible. Absolutely horrible. However, the use case regarding price, the fundamentals for price, not the use case, the fundamentals for price are very, very good. Let's talk about what's taking place right now in cryptocurrency. I believe the U.S. government has done a 1-2 punch, literally almost a knockout to the average individual Bitcoiner who holds cryptocurrency because they believe in the use case as a currency. The government has put crypto under attack, and I have to tell you, my hat's off to them, because in this arena, I see big government as an opponent. I got into crypto because I believed in the fundamental use case for the average individual, being able to be your own bank, take control of your finances, being able to transact without permission and without paying exorbitant fees to traditional finance, without making some wealthy institution even more wealthier, being able to control your own wealth, compound your own wealth, invest your own wealth, earn passive income. That's what we do on this channel. That's what it's all about ultimately. And it's because I believed in the fundamental use case of cryptocurrency. I have said on this channel many times that I thought there was going to come a time when the government was going to attack crypto. Now, I thought that what they would try to do is make it outright illegal at some point, at least illegal for the average individual, while allowing institutions access. But they've done one better than that. Let's get into this. First up, this is a two-part story. Seychelles, longtime home of BitMEX, is bending to U.S. pressure on KYC. Ladies and gentlemen, do not underestimate the power of the U.S. government. They are going to do everything they can to hold on to power. It doesn't matter whether it's a Republican or a Democrat. They're going to do everything they can to hold on to power of the issuance of money, the control of capital, the control of the fiat dollar. They're going to do everything they can. Nearly every country will bend to the will of the U.S. government in this current economic environment that we're in. And with that, the exception of 1 or 2 or 3, but most people aren't trying to do business with those countries anyway. Seychelles is a great example of this. Longtime home of BitMEX is bending to U.S. pressure on KYC. Out of a list of 26 cryptocurrency exchanges which are housed or located in the Republic of Seychelles, approximately half have poor know your customer procedures, according to blockchain tracking firm CipherTrace. Why is this important? Because KYC is where you give up your identity. Once you give up your identity, then they're able to use CipherTrace. Companies like CipherTrace are able to use chain analytics, and they can track every transaction you ever make anywhere on the blockchain. The idea that Bitcoin is anonymous, you will no longer hear that. There was news stories about people talking about the anonymity of Bitcoin 6-7 months ago. You will no longer hear about the anonymity of Bitcoin. I predict that right here, right now on this channel. By the way, if you haven't done so already, if you believe in the future of cryptocurrency and you love the idea of being able to invest into an asset that has gone up tremendously in the past and may continue to go up in the future, do me a favor, smash that subscribe button, hit that like button. Let's continue. Analysis of certain Seychelles-based exchanges reveals a proportion of funds flowing in and from high-risk sources and dark marketplaces. Now let's get to what they're talking about high risk in a minute. High risk is considered you if you have a private wallet. was a private wallet. A private wallet is a ledger, MetaMask, anything where you control the keys. We're going to talk about this. At the end of the video, I'm going to talk about my take, my plans moving forward, and really a cautionary tale for everyone. But let me just get through this first. In an interview with CoinDesk, the Seychelles Financial Services Authority acknowledged that the U.S. crackdown on crypto derivatives exchange BitMEX in October was a blow-up for the island. A former FinCEN compliance and enforcement director expects more actions from authority investigating the Seychelles jurisdiction. This is the first part of a two-part series. When it comes to island-hopping crypto exchanges with relaxed Know Your Customer procedures, Seychelles, I can't even say that right, domiciled BitMEX, whose senior executives were issued with arrest warrants in October, could just be the tip of the iceberg. Now, why is BitMEX in trouble? First and foremost, is because they're allowing people to transact. They had lax KYC. I mean, that's the bottom line. They're accused of money laundering, et cetera, et cetera. But it really does come down to having lax Know Your Customer anti-money laundering laws. Governments always use these laws, and they use them, I believe, more often than not, it hurts the little person. It doesn't, the bad guys are always going to find a way around. They're always going to find a way around. I think ultimately it's about maintaining control, and I'm not going to go all the way through this, but it's a very interesting read. We're going to be going more depth into the second article, but this is the first article that's basically talking about CipherTrace, how they're accessing these different exchanges and trying to look up their KYC, AML. Let's look at how they do it, by the way. They don't, this is crazy to me. They don't actually reach out to them and say, hey, what are your procedures? Here's how they do it. Take a look at this. Hang on. By the way, enforcement avalanche coming. So if you were starting a cryptocurrency project right now without KYC, AML, I would stop it. I wouldn't even continue forward. You're going to get yourself in a sling like there's no tomorrow. Long time coming. Okay, take a look at this. Where's it at? Right? The MO of CipherTrace. Listen to this. This is how they track this stuff. Listen to how sophisticated this is. After opening an account at an exchange, CipherTrace discovers the threshold for how much money can be moved about without doing significant KYC. So it's not like they notify BitMEX or Binance or any other exchange. They just go open up an account and they start basically running their programs and just start tracking to see what happens. To build up a picture of fund flows, CipherTrace circulates crypto around a network of what is considered to be high and low risk exchanges and also dark marketplaces. We move money to dark markets. We pay into ransomware and engage in commerce of all types, said John Jeffries, the firm's lead financial analyst. We're able to create between 3 to 4 million pieces of attribution data per week. Then we use a combination of machine learning and predictive analytic and clustering techniques to associate wallets with different entities and flow the funds around the internet. So they literally told you exactly how this works. They create accounts, they start moving funds around. And then at that point in time, they start using that to grade KYC grading system. CipherTrace said the KYC grading system is a fairly dynamic state of affairs, meaning it's not consistent. What they consider good right now and in the past has changed over time. They're still figuring out this technology. But ladies and gentlemen, this is an incredible read. This just tells you how far they're going. Now they're saying they're just checking this out for KYC, but it goes much further than that. I mean, what they're literally doing is literally taking the blockchain and they're creating identifying factors all the way across the blockchain. If you interact with it at some point or later, they're going to know who you are if you've done KYC AML anywhere. Now, you may, in the past, people try to avoid KYC AML. They tried to use exchanges that didn't require them to give their identity. And people felt like that was a good thing, the hardcore Bitcoiners. And I understood the logic behind it, but I also understood that you were playing with fire, and most people are not willing to pay the price to maintain their anonymity. Let's go to the second part of this. Before we go to the second part, I want to say this. The real question on why this is happening is about changing the fundamental use case, the fundamental purpose in cryptocurrency. The federal government is literally controlling how Bitcoin is used. And I think this is interesting, and I think it's very, very positive related when it comes to the price. I actually expected this to be a negative price. I figured originally when I heard the idea of what they were doing and how they were attacking crypto, I thought, oh, that's going to be bad for crypto. But then when I see the price keep going up, I'm asking myself, why is the price going up? And I'm going to share with you what I've come up with. Let's go to the second part of this very, very quickly. This is I want you to see the Seychelles because it was the first part, but I also want you to see the Seychelles article because I want you to understand to the extent that they're going to start creating KYC AML. This is no longer optional. You don't get a choice about this any longer. Seychelles hosted Bitcoin wallets become frontline and fight over crypto. Self-hosted Bitcoin wallets become frontline and fight over crypto regulations. Again, what is self-hosted? It's having your own TronLink wallet, your own MetaMask, your own ledger, anything where you have control over crypto. I'm telling you, the fundamental landscape is changing. I think there's plenty of opportunity for those of us here, and I think that there's a silver lining here. But let's get into this. Blockchain analytic companies tend to flag funds moving to and from private crypto wallets, with self-custody said to be the next fault line for crypto regulations. One such firm, CipherTrace, has examined privacy coins such as Zcash, as well as non-custodial peer-to-peer exchanges like Shapeshift, Local Bitcoins, and Paxful. See, this is interesting as well. Shapeshift, Local Bitcoins, and Paxful originally were created all about anonymity. It was all about, being able to transact in a way that was more anonymous. And what you're going to find out is every single one of them is caving to the pressure. Why? Because they're a for-profit business. And at the end of the day, profits will matter over principles. And that's not bad. A lot of people, they're like, oh, these big, rich companies. The reality is, for most of us, profit is most important over most of our principles. Very few of us hold principles that we're willing to sacrifice everything for that principle. Now, when it comes to cryptocurrency, almost none of us are willing to sacrifice or risk our family's well-being or our financial well-being just because we believe in the future of cryptocurrency. So I get it. It's unfortunate, but I get it. Particularly Shapeshift. Their CEO, Eric, I think it's Voorhees, is very. That guy. I've seen him speak on the internet at different conferences. I've watched the videos. He's very pro-privacy, but this. Again, with enough pressure, we all change. CipherTrace acknowledges compliance standards are evolving over time, having recently upgraded scores for Shapeshift and Paxful. Still looming regulatory action in the U.S. could soon require due diligence on self-hosted wallets. That's crazy. Regulated crypto is close to crossing the Rubicon, and we're not talking about the next price breakthrough. The steady creep of know your customer requirement over firms that touch digital assets is not at the foot of private self-hosted wallets. Regulated crypto is close to crossing the Rubicon, and we're not talking about the next price breakthrough. The steady creep of know your customer requirements over funds that touch digital assets is now at the foot of private self-hosted wallets. This move, which begins with regulated exchanges being required to do due diligence on non-custodial wallets they connect to, is already underway in places like Switzerland and Singapore, with the U.S. rumored to be next. Self-custody, being your own bank, and carrying out peer-to-peer transactions with a modicum of privacy is how crypto was designed. And while the Financial Action Task Force seeks to impose a traditional anti-money laundering framework on individual asset service providers, it's worth restating that crypto was born out of a desire to disintermediate traditional finance rather than break the law or facilitate money laundering. Exactly. Traditional crypto was created to get away from traditional financial firms, get away from having to rely on some intermediary versus breaking the law or money laundering. Deep in the thick of the standoff between crypto users and regulatory authorities are blockchain and analytic firms such as CipherTrace, Chainalysis, and Elliptic, which often act as a window into the crypto for law enforcement agencies. CipherTrace said it could not comment on work with regulatory authorities or law enforcement agencies. Rightly or wrongly, these sleuthing companies are guided by certain red flags when it comes to tracking funds around the crypto sphere, seeing regulatory risk wherever money moves in and out of self-hosted wallets, privacy coins, peer-to-peer exchanges, and Bitcoin ATMs, for example. Self-hosted wallets remain outside of FATF's reach for now, but the proportion of funds moved between exchanges and private wallets is a focal point for blockchain sleuths. This is not necessarily to do with criminal activity, says CipherTrace CEO Dave Javines, but simply because authorities can't see what's going on. Let's read that again. This is a problem. Basically, they're coming under self-hosted wallets are coming under attack. Not necessarily to do with criminal activity, but simply because authorities can't see what's going on. Ladies and gentlemen, I promise you, if you ever see this covered in mainstream news, they're going to say this is because of money laundering, criminal activities. And right here, the CEO of CipherTrace says point blank, it's not necessarily due to criminal activity. It's uncertainty that regulators see as problematic. They want to know what you're doing, where you're doing it, how you're doing, and how much of it you're doing. In a previous article, CipherTrace provided a snapshot of exchanges in the Seychelles, giving each KYC score. Here, the analytics company dives into the non-custodial wallet and peer-to-peer exchanges such as Shapeshift, Local Bitcoins, and Paxful. Shapeshift, the non-custodial exchange launched in 2014 by privacy advocate Eric Voorhees, has been an ongoing subject of KYC and fund flow analysis by CipherTrace. In August 2018, Shapeshift hired former Hogan Lovells partner Veronica McGregor as the exchange's chief legal officer, and soon after began requiring customers to reveal their identities to the exchange. Shapeshift has been given a red or weak KYC score by CipherTrace, which had also highlighted the proportion of funds flowing in and out of private wallets as a likely indicator of illicit activity. That's crazy. Did you see that? They had highlighted the proportion of funds flowing in and out of private wallets as a likely indicator of illicit activity. If a business had a lot of people who used their own wallets and weren't exchanging from one exchange to another exchange, then that particular business was red flagged as probably a likely indicator of illicit activity. Isn't that just nuts? The overwhelming majority of us in crypto use private wallets. That's just insane. Most of us know not your keys, not your crypto. You don't leave your crypto sitting on an exchange. But the very idea that you service customers, a large percentage of customers who had private wallets, meant that that was a likely indicator of illicit activity to them. That's crazy if you think about it. Just nuts. However, this score has since been upgraded to green by CipherTrace, which acknowledges that grading the KYC processes of exchanges is a dynamic state of affairs. Meaning, right here, it's changing. We got it wrong. We didn't know a rat's crap about crypto. We didn't realize everybody held their own crypto at the time. We didn't realize everybody held their own crypto at the time. Think about that. That's just crazy. We agree that their KYC processes today are green, said John Jeffries, chief financial analyst at CipherTrace. Shapeshift is a very unique company with an interesting past. This has spurred us to look at their edge case. Before September 2018, they had no KYC, and those hundreds of thousands of transactions are still on the blockchain, and some are involved in ongoing investigations. Of course, some transaction would be involved in ongoing investigations. It's just crazy. Privacy wallets not filtered. Hannah Burke, Shapeshift Director of Compliance, said the firm's revamped KYC involves a collection of a full range of personally identifiable information, as well as screening for sanctions and politically exposed persons, which the firm has been independently audited on. That means they're literally looking at transactions, following wallets to very specific identities of people. That's impressive. As far as funds coming from private wallets is concerned, Burke said Shapeshift is non-custodial by design. Our users will typically use their wallets in transferring between exchanges. So it's not a shock to me that private wallets make up a pretty good percentage, she said. Of course. I mean, it's insane. Shapeshift is an exchange inside of several private wallets like Exodus, for example. Privacy coins. Shapeshift stands at the intersection of crypto privacy issues, having recently removed support for privacy coins, Zcash, Monero, and Dash. We've taken down the privacy coins because of the regulatory concerns, said Chief Legal Officer McGregor. At least for the moment, we're not working with those coins. Privacy coins such as Zcash and Monero and privacy-enhancing wallets, Wasabi, Samurai, and others have valid uses, but are also clear red flags, says Jeffries of CipherTrace. I have covered the Samurai wallet, and I have used it in the past on this channel. Why? Because it allowed for good privacy. It allows you to be private. It's incredible. They're literally saying that if you want financial privacy, if you don't want it to be possible that every transaction you ever make of every size in cryptocurrency, if you don't want it tracked or used or observed, then basically you are a red flag. Think about this, ladies and gentlemen. This is unbelievable. There are ways to be, I promise there's a silver lining. Stick with me. There are ways to be compliant with these tech privacy coins, Jeffrey says. There are ways to make them safe and establish a source of funds so they're not inherently bad per se. However, they do carry with them additional risk. There's a way to establish the source of funds. In other words, there's a way to remove some of the privacy, and then they're not so bad. Isn't that ridiculous? Overblown? The electric coin company, the creators of Zcash, commissioned the Rand Corporation to explore the use of cryptocurrencies for illicit or criminal purposes, focusing on Zcash. Rand's year-long study showed the top cryptocurrency being used on dark markets or for money laundering and terrorist financing is far and away Bitcoin, said Josh Swihart, vice president of growth at the electric coin company. Of course, it's not the number one currency because the number one currency used for illicit purposes is the dollar through regulated banks. See, here's the thing. All this regulation about anti-money laundering and all this stuff is garbage. The dollar's used more than any cryptocurrency, but they don't want you to be transaction without them being able to be aware of what you're doing, how you're doing it, when you're doing it, who you're doing it with. I mean, does this concern anyone else? I mean, this definitely is a concern for me. Again, there's a silver lining. I'm going to get to it, but this is just, I couldn't believe this article. I'm like, this is just so unfortunate. But the main cryptocurrency is Bitcoin, way and above even Monero, Swinehart said. In terms of what's happening on exchanges with privacy coins, Swinehart pointed to the U.S.-based exchange giant Gemini becoming the first regulated exchange to support sending funds to shielded Zcash transactions in support of Zcash shielded deposits and withdrawals. Gemini stated that they use enhanced due diligence and may request users provide information on their source of funds, Swinehart said, therefore removing the privacy. Zcash is compliant under U.S. regulations, says Swinehart, as evidenced by Zcash support at Gemini, Coinbase, and others. Shapeshift's delisting of Zcash, Monero, and Dash does not mean that Zcash isn't compliant. It's specific to Shapeshift. Local Bitcoins. So we'll go. Basically, local Bitcoins has done the same thing. They now require KYC AML, which I think is amazing. I didn't realize that. I don't ever use local Bitcoin, but I think that's crazy because originally the reason behind local Bitcoins originally was to allow you to transact person to person and didn't necessarily have to use KYC AML should you choose not to. It's incredible. Paxful. Many people are familiar with Paxful. It's a peer-to-peer exchange. I actually almost did a video earlier this year on Paxful on buying using debit card, credit card, and PayPal on Paxful. I've done it. I've bought and sold just to make transactions, just to kind of see how it works. But I ended up not making the video because before I could make the video, they started doing a bunch of KYC AML, and I thought, I don't like it. If you're going to go through all the regulatory issues, Paxful is not any easier to use at all than any of the other platforms. So I felt like there's no reason to really use Paxful, in my personal opinion. So I chose not to make those videos. But again, the majority of the wallets are private. That's not shocking. And they're somehow painting it like it's probably a bad thing. So here's where we're at. And even though I don't like these news stories from the fundamental use case of currency, let me just say a couple things. First of all, it doesn't matter. The technology's out of the bag. It is the best 1-2 punch the federal government could ever do. Truly, truly. Because it makes it very difficult. If you were worried about some sort of economic catastrophe in the future and you're worried about, your finances being controlled or whatever, you wanted to have access to funds, your only shot at doing that is basically mining or pulling over some sort of anonymous Bitcoin transaction or Monero, which you can do right now. But you'd have to put it in a wallet and literally never touch that wallet until the risk of touching that wallet became worth, the need, basically, until the risk became worth it. Because if you ever, they're putting this in when these regulations go into place, it's going to be like this. You can always create another wallet, but they're going to know exactly who created that wallet because they're going to have identifying information on you, on your transactions through chain analysis. They're going to be able to know exactly who created that wallet, which means they're going to know exactly who sent money to the wallet. And so there's from that point forward, there's no, meaning you're not going to be able to be like, all right, let me go create my first Bitcoin wallet. You can create a wallet without having KYC AML. But you can't get the KYC AML. You can't get it. They're going to set it up so you can't get a deposit without KYC AML. You can't get someone to send you cryptocurrency without them knowing exactly who that person is. So therefore, it still gets traced back to you ultimately. And there is some people are saying this is going to be so strict that before you send a transaction, you have to know who you're sending it to. I don't think that's necessary for them to achieve their objective, and it actually hurts the total ecosystem. So I don't know if they're going to do that. I mean, I think it sounds good to some bean counter bureaucrat who has no idea what crypto is, but when you realize that people transact all the time, I don't think they're going to do KYC AML on. I don't think they're going to go that far. However, I told you this was actually good from one fundamental aspect. Here's how. They've basically pigeonholed cryptocurrency and Bitcoin into a store of value. That is the single biggest viable use case under regulations right now. And I believe ultimately they're going to cut the little guy out. They want to keep this for themselves. I encourage you, if it's possible for you to gain wealth, and I'm one of those people who believe it's possible for everyone, but it's not possible for everyone in 1 or 2 or 3 years. But if it's possible, if you understand investing, you know how to invest in real estate, or you understand dollar cost averaging, you understand how to pay off your debt, I encourage you to do everything you can to put yourself in a position where you can get as close to being an accredited investor as possible. Everything you can. But because at the end of the day, I do think they're going to, right now what they're going to do is say, hey, you can buy Bitcoin, you can speculate on price. And unfortunately, they did this at the right time. If they would have waited too much longer with what's coming down the pipeline from a economic standpoint with the U.S. government, if they would have waited too much longer, they would have been in a position that our Venezuela's in with the petrodollar. They would have been in that position, basically, if they waited too much longer. Basically, it would have been this position where people, the majority of the population wants an alternative to the current fiat system. See, the majority of the population right now, they only see Bitcoin as a speculative asset anyway, something they can buy and maybe speculate on price going up. I was on a golf course this weekend. I was talking to a gentleman. Now, again, I'm going to share with you my advice is specifically if you're dealing with like a lot of dApps and you have a lot of investments out there, you need to be prepared for what's coming. Otherwise, this is going to hurt a lot of average individuals, and I don't want you to get hurt. So I'm going to give you some advice in a minute on that. But let me just say that right now, they're setting this up so you can really only speculate in price. You can buy it, you can hold it, you can trade it possibly through an exchange. You can decentralized exchanges are going to be interesting because I think that's going to be where the next war is going to happen next. Truly decentralized exchanges, but that's going to be limited to things like Ethereum and whatnot. Ethereum type tokens. We'll have to see where that goes with the decentralized exchanges, but they are solidifying the use case Bitcoin as a store of value. I believe that's why the price is going up. I mean, if you've been reading the headlines, I think another $700 million transaction was taking place. I mean, the big funds, the quote unquote paper Bitcoin, so to speak, they're buying up Bitcoin right now. And why? Because the big money investors, they're not trying to put in, the average individual is like, hey, I can drop 200,000 on that asset. He's not trying to buy 200,000, put it on his nano and try to worry about, or his ledger. He's not trying to worry about where he's going to store it, how he's going to keep it secure. He's not ever looking at transacting. He's buried so deep in the current financial system that he's happy with where he's at. It's done well for him. So he's not going to change anything. And he doesn't care about the technology of currency. What he cares about is this asset going to go up in value? How do I get a piece of that price action? The easiest way for him to get a piece of that price action is to go through somewhere like on the low side, you're looking at somewhere like Robinhood or somewhere like that, eToro, where you can just hold it and speculate on price, but you can't really transact in it in a good, meaningful way. Or you're going to go through, Grayscale, one of those large companies that are buying in, one of these hedge funds, that are coming on board. And the big money wants to speculate on price. Traditional finance has found out how they can get their cut. They can speculate on price. Grayscale can charge their fees. Grayscale's traditional finance. Old school legacy finance. They're looking at Bitcoin as nothing but a commodity, and Ethereum too. They're charging their fees. They're doing whatever. I mean, and it's unfortunate, but that's all people care about is just price alone. I mean, I get all of us want to make money. I fully get that, myself included, yours truly. I was on the golf course. I don't even play golf, by the way, but I was on the golf course with some guys this weekend, and we were going back and forth, and he was asking about Bitcoin. He said, man, talk to me about this crypto stuff. And as we're on the golf cart, I pull up my wallet, and I happen to see that Bitcoin prices went up to 23,000. I said, it's at 23,000. He's like, good Lord, it's going to keep going up. So at the end of the day, I gave him this advice. I said, if you want to get into crypto, the easiest way to get into crypto is crypto.com. There'll be a link in the description. I said they'll give you $25 in free crypto just for opening an account, getting their debit card, their Ruby debit card. I said they'll give you $25 for free. And of course, they'll give me $25 for free. That's what I told him. You know what he said? He said, why would I do that? I said, well, it's the easiest, fastest way to buy Bitcoin. He said, but if I just want to speculate price, can I do something like Robinhood? And I said, well, yeah, but you don't have any control over your Bitcoin. Not really. I mean, you do have some control with Robinhood. He goes, yeah, I just want to speculate on price, though. Okay. And see, I get it. That's where the fundamental market is. That's where like most people are. What does that mean for the future of Bitcoin? It means that Bitcoin price is going up. It may go up a little bit more, but it's going up too fast not to have a pullback. It's going to have a pullback because somebody's going to want to start taking profits soon. That's why it's going to have a pullback. But it's going to continue to go up because it's becoming solidified as a store of value. So with changing environments, my advice to anyone, first and foremost, is don't try to hide Bitcoin. Pay, or any cryptocurrency, pay your freaking taxes. It's not worth it. It's not worth it. I do recommend that you have an account with an exchange like crypto.com is an exchange. They're the easiest way to buy Bitcoin that you can hold and you can transact in. They are by far the easiest. I just had a buddy of mine, Nerdy Dude. Some of you know his YouTube channel, Nerdy Dude Stuff. He said he just bought, I think he just purchased crypto for the first time with crypto.com, and he had Bitcoin in his account and could transact with it within an hour. You buy crypto with Coinbase, and it takes several hours to get there, and then you can't transact with it off of Coinbase for like 5, 6, 7 days or whatever it is. So crypto.com by far is the easiest way. Now, we'll tell you, crypto.com is about to increase their requirements. And I don't mean to pitch crypto.com, but I like them. I do mean to pitch them, I guess, but I'm not trying to make this sound like a commercial. I've done that on plenty of other videos. But they are increasing, and I'm going to make a separate video about this. They are increasing these tier marks. This is going to go to 5,000 CRO, which I said on another video, they like to keep it around $250 worth of state crypto, which is what they're doing. 5,000 is about $300 right now worth of crypto. And this one is 3,000. So they like to keep it around the 250, 2,500 range. That tends to be normal. Then it's 25,000. Then it's 250,000. That's normal. But you can get their free card. They have some great perks, et cetera, et cetera. Some awesome perks. I'm supposed to have this J Green card. I still haven't gotten it. I got to check on that actually. But I'll tell you right now that if you want to get the cards, I would get it now. If you wanted to upgrade to one of these two cards or any of these cards, I would do it now. I would go ahead and do it now, whether you already have the card. If you don't have the card and you want to get it, links in the description. But you can get the free card, but if you want to upgrade, I would upgrade now before I got to look at the exact date, but it's in 2 or 3 weeks, they're going to raise the minimum to be able to upgrade and get these cards. So why would I recommend crypto.com? Not only is it easy, they do full KYC AML, but it's very simple to do right on your phone. It's not complicated. The other thing about them is that they do all the tax reporting stuff. You'll get the tax documentation you need to give to your accountant or to H&R Block or however you do your taxes. That's going to keep you literally out of trouble. I mean, so I recommend that you be mindful of that. I recommend that you get crypto off of exchanges that don't do KYC AML because they're either going to get shut down or comply. And some of these exchanges are actually quite small companies, even though they deal with large volume of crypto. Some of them are very small companies. Some of them aren't able to comply. They don't even know how to comply. They don't even know where to begin. So they're just a bunch of geeky devs who create an exchange. Don't get caught in that crazy nonsense. The U.S. government's going to come in, and some exchanges, or not just U.S. government, the country's governments may come in and freeze some of these exchanges. Just be mindful of that. Just know that that's a risk you're taking, like OKEX and whatnot. So I recommend moving to exchanges, even if it's Coinbase. I personally am not a fan of Coinbase, but move to exchanges that do full KYC AML, and you should be okay from that standpoint. And just be mindful. Pay your taxes at the end of the day. Even if you're operating on exchanges that don't do KYC AML, pay your freaking tax. I don't like taxes. You probably don't like taxes. I don't think the government knows how to manage the tax revenues they have. However, it's not worth any of us getting in trouble with. And it doesn't matter, because if Bitcoin, the one article I mentioned on my channel previously, if Bitcoin is going to replace gold as a store of value, which I believe that it will, that's going to get Bitcoin, at least in today's valuation of gold in the gold market, that's going to take Bitcoin up to at least 500,000 per Bitcoin. Ladies and gentlemen, dollar cost average, buy Bitcoin. Earn passive cryptocurrency. If you're starting from scratch and you're like, how do I get started with no investment? I'm going to do a whole playlist on my channel about that. There's two things I'm going to do videos on coming up soon. I'm going to do a video on getting started from scratch with zero investment, how you can start earning with cryptocurrency. And I'm going to talk about the exact steps of what I recommend. Step 1, do this. Step 2, do that. Step 3, so on and so forth. This is from stuff that I've actually done and am doing now. And I'm also going to be covering some more content on new ways to earn passive income with cryptocurrency. If you love the idea, the best part about earning passive income with cryptocurrency, if you see my video on how to make $100 per day, I did projections based on the price of Bitcoin at the time of me starting that video. And in the time when I did that, at that point in time, 1 million Satoshi was roughly $100. Bitcoin was trading around $10,000. At this very moment, Bitcoin at 24,000, when I was expecting to be getting somewhere in the neighborhood about $25, $30 a day, I'm getting $60, $61, $62 a day. If you want to find out how, go watch my playlist on how to make $100 a day. I'll put it on the end of this video. And I'm also going to be creating some more content about passive income in cryptocurrency and other projects in crypto. So make certain that you stay tuned for that. Hit that subscribe button, hit the bell notification icon. Ladies and gentlemen, I got one question for you. One question only. Are you bullish on Bitcoin? Let me know down in the comments. Hey, thank you so much for watching. Remember, ladies and gentlemen, decentralized cryptocurrency equals freedom, although the government's going to work really hard to keep it centralized. Thank you so much for watching.